It's absolutely possible to refinance a property to buy another. It's something the OMA experts do a lot of. Most common examples we see are let to buy. So where you've got a property now that you want to move out and buy another one to live in, you rent yours out, so you'd refinance that onto a buy-to-let mortgage. You may want to borrow more money doing so to fund the deposit for the new one. That's absolutely fine. It's a really common one. The other is remortgaging where you live now, or a secured loan where you take extra funds from a new lender onto your property to fund deposit for a buy-to-let that you would have as an investment, or maybe a holiday let doing the same thing. Whatever it is that you're doing, the key things to think about: the amount of equity you have. So which property it is that you're refinancing. As your main residence, typically you can get up to 85% of what that value is. So if it's worth 100 grand, you can borrow about 85. There are some lenders that will go up to 90. It depends on the circumstances at the time. And then for a buy-to-let, if you were to finance on a property that isn't your main residence, typically they'd go up to 75%. Some might stretch out to 80, maybe in certain circumstances 85%. Affordability is the next key one. So based on your current mortgage where you live at the moment, your main residence, the lenders will be looking at your personal income, whereas if you were financing on a rental property, they'll be looking at the rental income on that property to determine how much you can afford to borrow. So you may find that although you can't get as high a loan to value on a rental property, because the income is covering it more adequately than your personal income, you may be able to borrow more on a buy-to-let than you would do on your main residence. The other thing is cost, typically, and it's not always the case, but rates tend to be a bit higher on buy-to-let properties than your main residence. That's a factor. And then there's tax benefits as well that, I mean, we can't advise on tax, of course, you need to speak to accountants about it, but typically many landlords will own a property in a limited company wrapper because of a tax advantage to doing so. Equally, if you've got a buy-to-let mortgage in your own personal name, the income that you would receive from that can be has all got to be calculated for tax purposes. And also the interest that's paid on the mortgages, that's all got to come into it to work out what's going to be the most affordable and best way for you to borrow. Is it on your main residence? Is it on another property? It's essential you get this right. It can cost you a lot of money paying extra interest and extra tax doing so. Also a lot of headache with fees and other things that are involved if you approach the wrong lenders. The process is really simple when you know what you're doing. So make an inquiry and get one of the OMA experts to help.